just making sure you understand this is Millennial Finance, and everything you see here is just information. Do not take financial advice from me. Do not use me as your financial advisor. I'm just giving you information and you can take it. It's going to be literally just something I want to give advice on. And it's not something you should take solely. You should probably get your own financial advisor and your own accountant. So go ahead and watch the video. Everyone, this is Millennial Finance. We'll just call it that because I'm a millennial and we're going to talk about finances. So the very first episode, this is number 1 of 1 so far, so we'll see if we can make some more. So if you keep watching my channel or subscribing, I'll probably make more episodes. That's all I have to say to it. Alright, so let's go over number 1, first time home buyer. So if you are buying a house for the very first time, it's going to be a very, very scary experience. I can attest, I'm in the middle of buying my very first house, and I just want to address this. So here are some fictional stuff that you probably hear, like you need 20% down. That's untrue. You don't need that. There are several types of loans you can do. There's, like, say, a FHA, which is the Federal Housing Association type of loan, which requires only 3.5% down, and that would probably require you to do a PMI, which PMI stands for private mortgage insurance, which is like an insurance on top of the loan you're going to take, which you have to pay for, which is very annoying. So I don't like PMIs, and if you can avoid them, do it, but don't let that deter you from buying a house. A lot of people have to do PMIs. There's also special loans. I've heard you don't have to do any money down. I heard the VA loan, which is the Veterans Affair. You have to be a former military for that, or have special, I guess if your spouse has a military association with that, they can probably get a VA loan, and that's 0% down. But let's go over the other one, which is the third one, which is conventional loan, which I'm going through. And right now, I think if you talk to a loan agent, right now I'm going through Bank of America, and they offered me a 3% conventional loan, 3% down, that is, for 30-year conforming fix, that's what they call it. And I am kind of liking that loan because there's no PMI, but requires a lot of paperwork, a lot of scrutiny, and you got to go back several years of finances, and they have to track it and see what you're spending on your W-2s. So first and foremost, what I recommend if you're trying to get out of a house, number 1, first get pre-approved first. So go to wherever you're going to try to get your loan from. You can do it online, you can take it to a bank. I recommend taking it to the bank because it's your first time. You can ask questions, they'll walk you through, and that's what I did. So very first, got pre-approval, and I went to the Bank of America, and they told me I qualified for this special loan they had, which they had me take a course in first-time home buyer, and they gave me 10 grand in down payment assistance and up to 7.5 in closing costs, and that kind of helped up a lot. So yeah, that's number 1. And what do you need? Okay, for number 1, probably your last 2 years W-2s, your tax, pretty much your whatever your tax, your last 2 years taxes, bank statements, investment statements. Like if you invest with Robinhood, they want your pretty much the last 2 months of investments and your account information. If you did Vanguard, they want that too. So they want all of that information to make sure you have the collateral, which is where they money. And they also want consecutive weeks of pay stubs. About 30 days would do it. So just whatever your last 30 days of paychecks, make some copies of them, turn them in, and all those would definitely help you in getting your loan. Alright, so the next thing is your down payment. Okay, so you don't need 20%. Okay, 20% is quite a bit. And I know people want to do 20%, but if your house is going to be like $500,000, and you're going to save $100K, that is quite a bit. I'd rather just do 3%, which is way better than 100K. So you do 3%, which is like, so let me do the math. 1% of 100K is 1,000 times 5, so it's like $5,000 times 3 is $15,000. $15,000 is way better than $50,000, right? Which is 10%. 20% would be 1 to 100K, like I said. So yeah, 3% versus 20% is a huge difference, and I highly recommend 3%, 3.5%. Small for your very first home. And if you like these types of videos, I can give you tips on what to do next to, I guess, purchase a home or find a home that goes within your limit of how much you want to save up. The next thing you need to know are closing costs. So after it all goes through, there's closing costs, and that's usually 2 to 5% of your entire mortgage. So you buy a house that's, say, 100K, it's going to be somewhere around $2,000 to $5,000, right? 2 to 5,000. So that's about right. Usually it's more closer to the lower, which is $2,000. So you buy a 300K house, it's going to be like $6,000 in closing costs. The next thing you need to know about is the PMI, the private mortgage insurance. The good news is if you do pay 20K or 20% down, you don't have to pay PMI. But there are also other special programs. If you ask the mortgage agent at the bank or somewhere, wherever you're taking your loan, they'll offer some special conforming fixed rates, hopefully, and you don't have to pay PMI as well. And that's just pretty much how it goes. So it's just as easy as that. So here are the timeline of events. Okay, so I know it's kind of scary, so we'll go over the timeline. So as soon as you get pre-approval, then you find a place you like, you go to the timeline of events, which is number 1 is pre-approval. You get all your information, you turn it all in, you probably can get that done in 2-3 days, 1 week tops, once you get all your info in. Then you gotta find a place. Say you just start going out and you find your place right away, and you say, I want this home. Okay, from that point on, when you find the place, which can take as long as you want, you place the bid on the place. Okay, so this is not, you can't just buy it. So say a place is worth 100K, you place a bid. You can place 100K, which is the amount. You can go under, you can maybe even go over. So the reason why you go under is if you think, you know what I mean, you can get it for cheaper. You go over is if there's a lot of people interested in the property. And then you place the bid. The next thing is the seller either accepts the bid or counters offer or totally rejects it. So the point of the matter is you don't want to place too low a value, way below the market price where the seller says no way, and you don't want to be too high and just say, oh, you know, he's going to take you to the cleaners and just ask for as much money as they want. So you usually have pretty much your realtor make the decisions. Usually you have a good realtor, they'll look it up, they'll look at comparisons, we call them the comps, which is comparative sales. They'll look at properties that are the same, like 3-bedroom, 2-bath, 4-bedroom, 3-bath, and whatever sold around the area. They'll try to give an offer that's similar to the price. And from there, they're going to send it into the selling agent, and the selling agent talks to the seller, and they will discuss and So it happened that I made an offer on my property, and they counter offered, and the counter offer was acceptable, so we accepted. And after that, she goes into this phase called escrow. Okay, so escrow lasts up to, they say, about 45 days or so. So mine's 45 days. And during escrow, we got to sign a lot of paperwork. I will go over it in another video if you guys are interested. You know, make some comments, send some support. You know, I mean, click the like button, smash the like button. I'm sorry, subscribe and share. You know, I mean, just make it so like, because I need some inspiration. I can't just do these videos for fun. I kind of need to spend my time more wisely, and I feel like if I make videos like this, people are interested. I can develop a following, and I can actually moonlight as a financial advisor, something like that. Alright, after you go through escrow, okay, you sign all this paperwork, you have this thing called a home inspection, and you pay it out of your own pocket. So the buyer pays for the home inspector to inspect the place, to make sure there's nothing wrong with the house, there's nothing leaking, there's no, I guess, tears, broken, stuff that should be very important. So home inspector is very important, have it inspected. And if there's anything wrong, you can bring it back to the seller and say, hey, you gotta have these things fixed, or you gotta take some money off the table and lower it so you can fix, or you gotta meet me halfway because I'm not gonna fix all these things myself. Another guy is an appraiser, which you have to pay out of your own pocket too. And I know, it's getting very, very expensive. And tell me about it. Okay, it's out of pocket, it's out of your own pocket. It's an appraiser, and that's gonna cost quite a bit of money too, like roughly 600 bucks. And they are going to see how much the value of the house is. They're gonna walk around. They're pretty much going to compare it to all the other sales that have been going around lately around the neighborhood, and then, you know, look around and see how much better the house is and see what the value would be. And after the appraisal is made, then you send it to you, and they send it to the mortgage loaner to make sure that I'm not overpaying or something like that. And if I am, definitely will have to talk to the seller and the selling agent. They'll have to meet somewhere near the middle if definitely is over the top, because you don't want to spend, I guess, say for a loan you want to pay $400K for a $350K house, or for $1 million house pay $1.2 million or something like that. So the appraiser will ensure that the house is relatively within the correct amount for the mortgage. And then once you pass escrow, you make all your final payments, you complete your closing costs, and you get your place. And that's literally the process for buying a house. You get pre-approved, find your house, go through escrow, and then bam, that's your house. So if you like this video, please share this and smash the like button and subscribe. And definitely we'll make way more videos like this, and I'll be happy to explain things. If you have questions, go ahead and leave comments.